Hi, welcome back. In this section, we will go through part one of the valuation ratios, where we will walk through the earnings per share calculation. On this slide, we will now calculate the earnings per share, or EPS, for Amazon. But first, what is earnings per share, or EPS? Well, EPS serves as an indicator of a company's profitability. It tells us how much money a company makes for each share of its stock and is a widely used metric for corporate profits. A higher earnings per share indicates more value because investors will pay more for a company with higher profits. Earnings per share is generally broken out into basic or diluted. So you're probably thinking to yourself, what's the difference between basic and diluted earnings per share? Well, diluted earnings per share calculates a company's earnings per share if all convertible securities were converted to common stock. For example, converting securities generally lowers earnings per share, and as such, diluted EPS tends to always be lower than basic earnings per share. The main takeaway here is that diluted earnings per share is a conservative metric because it indicates a worst-case scenario in terms of EPS. So how is this calculated? Well, this is calculated by taking the company's net income for the year and dividing it by its weighted average shares. And depending on the metric you're calculating, you will either take the basic or diluted weighted average shares. So let's start this calculation for Amazon. First, we'll locate its net income for fiscal 2019, which was $11.6 billion. Then we'll notice that it has 494 million of basic weighted average shares. And then we have around 504 million of diluted weighted average shares. So now for the calculation, it's a simple calculation where we take the net income divided by the basic weighted average shares, which gives us $23.46 for the basic EPS. Now for diluted earnings per share, we take the same net income of $11.6 billion and divide that by the 504 million diluted weighted average shares amount. And that gives us a dollar amount or per share amount of $23.01 for diluted EPS. So this is effectively telling us that Amazon generates around $23 of earnings for each common share in the marketplace. Now let's move on to Walmart. On this slide, we'll calculate basic and diluted earnings per share for Walmart. Again, we'll use the same formula, which is net income divided by the weighted average shares. And we'll notice that Walmart had net income of around $14.9 billion for fiscal 2020. And then at the bottom of this page, we'll see that Walmart had 2.8 billion basic weighted average shares and almost 2.9 billion of diluted weighted average shares. So calculating the basic earnings per share, take our net income divided by our basic weighted average shares, and that gives us basic EPS or earnings per share of $5.22. Next, for the diluted earnings per share, again, take the same net income of $14.9 billion and now divide that by 2,868, which is the weighted average diluted common shares outstanding. And that gives us an amount of $5.19 of diluted earnings per share. So what does this mean and how does it compare to Amazon? Well, in short, this tells us that Walmart generates around $5 of earnings per share, or around 5.20. As compared to Amazon, we can see that for each outstanding common share, Amazon is actually able to generate more earnings per share as compared to Walmart. Hi, welcome back. In this lecture, we will go through part 2 of the valuation ratios, where we will walk through the price-earnings ratio. On this slide, we'll calculate the price-earnings ratio, or PE ratio, for Amazon. So what is the price-earnings ratio, or PE ratio for short? Well, this relates a company's share price to its earnings per share. For example, a high PE ratio could mean that a company's stock is overvalued, but it can also mean that investors are expecting significant growth for the company in the future. There are different types of PE ratios, and in this lecture, we'll calculate a PE ratio based at a point in time at year end, as well as the trailing PE, or trailing 12 months. So how is this ratio calculated? The price-earnings ratio is simply calculated by taking the company's share price and dividing it by its earnings per share. Using Amazon as an example, we notice that at year end, it closed at $1,846.89. And then here we can locate its diluted earnings per share amount of $23.01 per share. Now, when you take that share price over its diluted EPS, we come up with a PE ratio of 80.26 for Amazon. Now, let's calculate this PE ratio for Walmart. Again, using the same formula, we'll take Walmart's closing share price at their year end, which was $116.58 a share. And then we'll find Walmart's diluted earnings per share for fiscal 2020, which was $5.19 a share. Taking this ratio, we come up with a PE ratio of around 25.22 for Walmart. Now, a more common form of calculating PE ratio would be the trailing PE ratio. Here, instead of using just the year-end share price, we would use the trailing 12-month share price for Amazon. And here we can see that as at December 31st, 2019, based on the trailing 12-month share price and taking that over earnings per share, we can see that the trailing PE for Amazon was around 81.87. Another item to note here is that subsequent to year end, we'll actually notice that the trailing PE has gone up significantly for Amazon. For instance, as at June 30th, 2020, the trailing PE actually went up to 131.81. So again, a lot of that is driven either by its earnings per share, or more likely, it'll be driven by the trailing 12-month share price as the market moves. Now, similarly, we'll look at the trailing 12-month PE ratio for Walmart. And here we can see as at Walmart's fiscal year end of Jan 31st, 2020, Walmart had a trailing PE ratio of 22.94. And we can see, even in subsequent quarters, it stayed around a trailing PE ratio of around 23, showing that there has not been significant movement subsequent to year end versus what we saw in the earlier slide for Amazon. Hi, welcome back. In this section, we'll go through the scorecard for the valuation ratios for Amazon and Walmart. First, we calculated the PE ratio as at year end. For Amazon, we calculated a PE ratio of around 80.26 as at their fiscal year end. And then for Walmart, they had a PE ratio of around 25.22 as at their fiscal year end. So here, Amazon would have the higher PE ratio. And using the trailing 12 months, or the trailing PE, we notice that Amazon had a trailing PE ratio of around 81.87, whereas Walmart had a trailing PE ratio of around 22.94 as at their fiscal year end. So again, Amazon would have a higher PE ratio and is more highly valued in the marketplace.